Let's revise the steps relating to the consolidation of the balance sheet. Step 1, data of acquisition and data of consolidation. Step 2, shareholding pattern of subsidiary company. So we have to consider what is the portion of the parent company and what is the portion of the minority interest. And step 3, we have to provide analysis of resource and surplus of subsidiary company. The reserves and surplus of subsidiary company is divided between pre and post acquisition period. The reserves and surplus relating to the prior to the date of acquisition period covered under pre, and the reserves and surplus belongs to the subsequent to the date of acquisition covered under post. And along with that, we have to calculate in the pre-acquisition period what is the portion of parent company and what is the portion of minority interest. In the post-acquisition period, what is the portion of parent company, what is the portion of minority interest. This is the step 3. And this step 3 is very, very important. If you do anything wrong in step 3, it will affect step 4, step 5, and step 6. Okay. And step 4, cost of control. And this is for calculating what is the goodwill or capital reserve. In cost of control, first we consider what is the cost of investment. And this point will give directly in the problem. If it is not given, then in the holding company standalone financial statement, investment in subsidiary company figure we have to consider. And cost of investment minus pre-acquisition period dividend received, if any, called as net investment. And from there, we have to reduce parent company share in net assets of a subsidiary company on the date of acquisition. Net assets means share capital of subsidiary company on the date of acquisition and pre-acquisition period profit share relating to parent company. If the share capital and pre-acquisition period profits are not given, then we consider net assets on the date of acquisition relating to subsidiary company in that parent company share we have to reduce. If the result is the positive, then we consider it as capital loss and transfer to goodwill. Otherwise, if it is negative, consider as capital profit and transfer to capital reserve. And step 5, minority interest. Minority interest sharing, share capital of subsidiary company and pre-acquisition period profits of subsidiary company, post-acquisition period profits and reserves of subsidiary company. And the pre-acquisition period profits and post-acquisition period profits and reserves will take it from step 3. And another one, consolidated reserves and surplus. In this case, holding company reserves and surplus, we have to consider this part. We take it from standalone financial statement of holding company, add holding company share in post acquisition period profits. This part we take it from step 3, analysis of reserves and surplus, and the total consolidated reserves and surplus. And step 7, elimination of mutual transactions or mutual owings, if any intergroup transactions we have. And if one company is selling the goods to another company on credit basis, it become debtor to one person, creditor to another person. We have to reduce it from total of trade receivables and total of trade payable. If the one company lending the amount to another company, it became borrowings to one company and the loans and advance to another company. We have to reduce it from borrowings as well as it from loans and advances. Any mutual transactions we have are required to be eliminated. These are the steps we have. And then we move on directly to what is the balance sheet. In case of balance sheet, we follow Schedule 3 format, and share capital we only consider parent company share capital. Reserves and surplus we take it from step 6, and step 4, if capital reserve we have. Minority interest we take it from step 5 directly. Long-term borrowings means non-current liability, holding plus subsidiary minus mutual owings if any, and current liability, holding plus subsidiary minus intergroup transactions if any, and non-current assets, holding plus subsidiary if any. But coming to the non-current investment, don't consider investment in subsidiary company. And coming to the current assets, holding plus subsidiary company. In case of investment, holding plus subsidiary minus stock reserve if any we have. Nothing but unrealized profit is required to be eliminated.